All right. Looks like you've got a mountain of paperwork there on this Vishal Mega Mart IPO.
Yeah, I've been trying to get a handle on all the ins and outs.
I can only imagine. Indian retail is a pretty wild world. But IPOs don't have to be a mystery. We're going to take a deep dive into Vishal Mega Mart, their business model, their financials, and yeah, all the crucial IPO details too.
Sounds good. Should be a fun one to unpack. It's an interesting company for sure.
Okay, let's start with their business model. They really emphasize this value-first approach. What's the story there?
Well, it's all about finding that sweet spot between price and quality.
So they're not going for the absolute cheapest option.
Not necessarily. Think of it more like an upgrade from the unorganized retail experience, but without the price tag you'd find at a big department store.
Makes sense. Now, they're really pushing their own brands. 19 were bestsellers last year, which seems like a lot. Is that pretty standard in retail these days?
It's a strategy that's gaining popularity, especially in a market like India.
Yeah, why is that?
Well, think about it. Having their own brands gives them way more control over pricing and their supply chain, which is crucial in a country as diverse as India.
It's true, the needs of consumers in Mumbai are going to be totally different than the needs of consumers in a rural village.
Exactly.
Their store network is pretty impressive too. 626 stores in 403 cities. That's a huge footprint.
And they're not just targeting those big cities.
So they're reaching those aspirational consumers in Tier 2 and 3 cities too.
Exactly. That market is really growing and looking for that balance of quality and affordability.
All right, so the business model seems solid, but what about the numbers? You've been digging through their financials. Are they actually making money?
They seem to be in good shape financially. Their revenue from operations has been climbing pretty steadily.
By how much?
Between fiscal year 22 and 24, their own brands alone saw a compounded annual growth rate of 27.72%.
Wow, almost 28%. That's impressive. But are they turning a profit or just growing for the sake of growth?
No, their profit before tax jumped significantly last year, and their EBITDA margin is competitive with some of the other big retail players.
That's a good sign for sure. But speaking of the big players, you flagged DMart and Big Bazaar as their main competitors. How does Vishal Mega Mart measure up against those giants?
Well, it's kind of a David and Goliath situation. Like DMart, for example, has a much bigger market share.
And they're known for being super aggressive on pricing.
Exactly. So how can Vishal compete?
Yeah, that's a good question. What are their advantages?
Well, they're taking a slightly different approach. That focus on own brands gives them more flexibility, and they've got that strong presence in Tier 2 and 3 cities where DMart and Big Bazaar haven't really penetrated as much.
Smart, going after a different segment of the market.
And they're building out their e-commerce platform too, which could be a game changer.
Okay, so they've got some interesting strategies in place. But let's get to the heart of this deep dive, the IPO itself. What's the issue size? What kind of valuation are they aiming for? How do they plan to use the funds they raise? You've got some key details highlighted there.
The promoter selling shareholder is offering up to OR shares. So Samayat Services LLP is offering up a pretty substantial chunk of their holdings.
Okay, that's a significant amount. And what about the valuation? How does it compare to similar companies in the retail sector?
Well, you've got some price-to-earnings ratios highlighted. They're aiming for a valuation that's competitive, but maybe a bit higher than average for similar companies.
Interesting. We'll have to see if that's justified. Now, every investment comes with risks, right? What are some of the potential red flags you're seeing?
Well, the Indian retail market is insanely competitive, and consumer preferences can be fickle. That's always a challenge in this industry.
So staying ahead of the curve is crucial. What else jumps out as a potential risk?
Their supply chain is something to keep an eye on. They rely heavily on third-party providers. And then there's the regulatory landscape in India, which is, well, constantly changing.
So there's definitely a lot to consider before jumping into this IPO. But before we wrap up this part of the deep dive, what about the future? What are their plans for expansion? Are they just going to sit back and relax, or are they aiming for something bigger?
They seem to be very focused on growth. They want to expand their store network even further, and they're really pushing forward with their e-commerce strategy.
So they're not resting on their laurels. Tell me more about their e-commerce plans. Are they going head-to-head with giants like Flipkart and Amazon?
They're actually trying something a little different. They're experimenting with a hyper-local online offering.
So trying to connect shoppers with their nearest Vishal Mega Mart store.
Yep. It's a way to combine online convenience with their existing offline strength.
That's a clever strategy. Okay, last but not least, let's talk about the people behind Vishal Mega Mart. You've circled some information about the promoters. What's their track record? Anything noteworthy about their shareholding pattern?
The promoter group has a lot of experience in the retail and consumer goods sectors. They've been involved in building some successful businesses, so their expertise is definitely a plus.
That's good to know. But I always worry about potential conflicts of interest. Anything jump out at you in that regard?
Well, there's one thing that caught my eye. One of the promoters also provides transportation services to the company.
Hmm. That's definitely something to keep in mind. We need to make sure everything's above board and that there are no hidden downsides for minority shareholders.
Exactly. Transparency is key when you've got these kinds of related party transactions.
Okay, we've covered a lot of ground in this first part of our deep dive. We've got their value-first business model, their ambitious growth plans, and even some potential red flags to watch out for.
And in the next part, we're going to take an even closer look at their financial performance. We'll unpack their revenue breakdown, profitability trends, and that all-important debt situation.
Sounds good. Stay tuned for part 2 of our Vishal Mega Mart deep dive.
You know, we were talking about their own brands being a key part of their strategy.
Yeah, they seem to be really pushing them.
It looks like it's paying off. In fiscal year 2024, their own brands brought in $63,993.42 million in revenue.
Okay, so that's a big chunk of change. But how much of their total revenue does that actually represent? What's the split between their own brands and those third-party brands they also sell?
That's where it gets really interesting. Own brands accounted for 71.85% of their total revenue in fiscal year 2024.
Wow, over 70%. So they're not messing around when it comes to those own brands.
Not at all. And that's a big jump from about 63% just 2 years earlier.
Okay, so they're definitely putting their money where their mouth is when it comes to those own brands. But is it actually translating into profit?
It seems like it is. Their profit before tax increased quite a bit last year. In fiscal year 2024, it reached $6,209.51 million.
Okay, so they're growing, they're profitable, but you know me, I'm always a bit wary of companies that grow too fast by loading up on debt. What's their debt situation look like? Are they financing all this expansion with a ton of borrowed money?
They do have some debt, yeah, but it seems manageable right now. As of September 30, 2024, their total borrowings were $2,550 million.
Manageable, you say. That still seems like a pretty hefty number. What's their debt-to-equity ratio looking like? That's always a key metric for me when I'm trying to figure out how risky a company is.
Yeah, the debt-to-equity ratio is definitely important. We'll have to dig into that and analyze it carefully to get a clearer picture of their financial stability.
Agreed. But for now, let's zoom out a bit and talk about how they fit into the competitive landscape. How do they measure up against those retail giants, D-Mart and Big Bazaar? Those are some big names to go up against.
It's a tough market to crack, that's for sure. But Vishal Mega Mart has some things going for them. One thing that sets them apart is their focus on those tier 2 and 3 cities. They've established a good presence in places where D-Mart and Big Bazaar haven't really gotten a foothold yet.
That's a smart strategy. Go where the competition isn't as fierce. But what about their overall market share? Are they a tiny fish in a big pond, or are they a force to be reckoned with?
Well, D-Mart is the undisputed leader. There's no question about that.
They're the 800-pound gorilla in the room.
Exactly. Vishal Mega Mart is still smaller than Big Bazaar in terms of revenue, but they're growing pretty rapidly. They could definitely become a major player if they keep up the momentum.
It's like a race to the top.
Hey.
Okay, now let's dive into this IPO. You mentioned that the promoter is selling a big chunk of their shares. Is this just an offer for sale, or are they issuing new shares too to raise capital for the company?
It's important to know the difference, and in this case, it's all an offer for sale. The only seller in this IPO is the promoter, Samayat Services LLP. They're not issuing any new shares.
So no fresh capital coming into the company itself. Interesting. So that means the money from this IPO is going straight to the promoter, not to Vishal Mega Mart. Any ideas on how they plan to use those funds?
That's a good question, and it's something potential investors might want to consider. The prospectus doesn't really give any specifics about what the promoter's plans are for the money.
Okay, so a bit of a mystery there. What about the price range for the shares? You've got some numbers highlighted. What are we looking at?
It looks like they've set a price band of heirs per share to error per share.
All right, so we know the price will land somewhere between those two numbers. We'll see how the market reacts. But before we get caught up in the price, I want to go back to those risk factors we talked about earlier. Competition, supply chain issues. What else should potential investors be thinking about? Any other red flags waving in the wind?
Well, one thing that stands out is how much they rely on other companies to make their own brands.
Right. They use third-party manufacturers. A lot of companies
Yeah.
do that, though. What's the problem?
It's not necessarily a problem, but it's a risk to be aware of. Quality control is one issue.
Yeah, if a manufacturer doesn't meet their standards, that could hurt the reputation of their own brand.
Exactly. And then there's the risk of disruptions.
Like if a manufacturer has some problems and can't deliver on time.
Exactly. That could throw a wrench in their whole supply chain.
Okay, so relying on outside manufacturers, that's one risk to keep in mind. What other potential challenges are lurking out there?
Well, like any company operating in India, they face those ever-present regulatory risks.
Yeah, the rules and regulations are always changing. What specific regulations should we be paying attention to?
There are quite a few, but some of the big ones are the Food Safety and Standards Act, the Legal Metrology Act, environmental regulations, and labor laws.
Okay, so a whole bunch of hoops to jump through.
Hmm.
Have they had any problems complying with these regulations in the past? Any skeletons in their regulatory closet?
That's a great question, and it's something we definitely need to dig into. We'll want to take a good look at their legal and compliance track record to see if there are any patterns or incidents that raise red flags.
All right, so another item for the to-do list. But now let's shift gears back to their expansion plans. We talked about how ambitious they are about growing their store network and building that e-commerce platform. But are there any roadblocks they might hit along the way? What are the biggest challenges they'll face?
Well, expansion always comes with its own set of challenges. One thing they might struggle with is finding good locations for new stores.
Especially as they go deeper into those tier 2 and 3 cities.
Yeah, real estate can be a major headache.
It's true. Location is everything in retail. And what about on the e-commerce side? They've got that unique hyperlocal model, but is it going to be enough to compete with giants like Flipkart and Amazon?
That's the million-dollar question. It's a bold strategy, that's for sure. It could really pay off if they can use their existing store network effectively and create that smooth online to offline experience.
Yeah, it's all about making it easy and convenient for shoppers.
Oh.
Okay, before we get too carried away with their plans for the future, let's go back to the people in charge for a moment. We touched on their experience, but what's their ownership structure look like? What percentage of the company do those promoters currently own?
That's an important piece of the puzzle. Right now, the promoters own a pretty big chunk of the company, about 96.55%.
Well, 96.55%. So they've got a lot of control over how things are run. But what happens after the IPO? How much of that ownership will they keep?
Well, that's where it gets a bit complicated, and it's definitely something investors should pay attention to. You see, Samayat Services LLP, the promoter, is selling a big chunk of their shares in the IPO.
Right, but how much exactly? And what will that mean for their control after the IPO? Will they still have the majority?
We'll have to look closely at the numbers and see how the ownership structure shakes out after the IPO. It's really important to understand how much their ownership gets diluted and how that might affect the company's governance. There's a chance they could end up with less than 50%, which would mean they wouldn't have a controlling interest anymore.
Okay, so there's some serious analysis to be done on that ownership situation. But before we move on, I'm curious about any, let's say, interesting relationships within their leadership or among their shareholders. Are there any potential conflicts of interest we haven't talked about yet? Anything that might raise an eyebrow for investors?
Always thinking like a detective. And you're right to be cautious. There are a few things that warrant a closer look.
Oh, like what? Fill me in.
Well, we talked earlier about how one of the promoters, Samayat Services LLP, also provides transportation services to the company.
Yeah, what about it? Isn't that just a normal business deal?
It could be, but it's worth digging a little deeper. We need to look at the terms of that agreement, how much business they do, and whether it's all done at arm's length. There's always a risk of conflict of interest when you have those overlapping roles.
You're right. We want to make sure everything's on the up and up, that minority shareholders aren't getting the short end of the stick, no sweetheart deals going on behind the scenes.
Absolutely. And then there's another connection that's a bit intriguing. One of the other promoters, Kadara Capital Fund 2 LLP, is part of a whole network of investment funds and management companies.
Okay, so what's the potential problem there? Are these other entities somehow connected to Vishal Mega Mart?
It's not entirely clear, but we need to look at who owns Kadara Capital Fund 2 LLP and how it's connected to these other companies. Are there any common investors or shared decision-making? We need to know if there could be any conflicts of interest or undue influence coming from these connections.
This is starting to feel like we're unraveling a big, complicated web.
It kind of is. And it shows why it's so important to really scrutinize the leadership and ownership structure of any company before you invest your money. We need to make sure everything is transparent and that there aren't any hidden agendas or conflicts of interest that could hurt the company or its shareholders.
Okay, so we've got some more homework to do on those promoter connections.
Yeah.
Any other eyebrow-raising relationships or details we need to investigate? Anything else hiding under the surface?
Well, there's one more thing that might be worth looking into. Mr. Gunender Kapoor, one of the key players in the promoter group, has a bit of a history in the consumer goods sector.
Okay, so he's got industry experience. That's usually a good thing, right? What's the catch?
No catch necessarily, but it's always a good idea to check out someone's track record. Were there any controversies at his previous companies? Any regulatory issues? Questionable business practices? It's just a matter of doing our due diligence, making sure there are no skeletons in the closet that could come back to haunt Vishal Mega Mart.
All right, better safe than sorry. All right, so we'll add that to our growing list of things to check out. Now, before we get too distracted, let's get back to those regulatory risks that come with operating in the Indian retail sector. We've talked about the laws changing, but what specific regulations does Vishal Mega Mart need to comply with? And have they had any problems with this in the past?
Great question. The Indian retail scene is heavily regulated, so there's a lot they need to keep track of.
Okay, so give me the rundown. Which regulations are the most important, and are there any areas where they might be a bit vulnerable?
Well, one of the biggest ones is the Food Safety and Standards Act of 2006. They call it the FSS Act for short.
The FSS Act. That makes sense. They sell a lot of food, so making sure that food is safe is a top priority.
Absolutely. Consumers need to know that the food they buy is safe and meets certain standards.
Exactly. So complying with the FSS Act is a must for any company in the food business. They've got to make sure their products are safe, the labels are accurate, and everything's hygienic. And the fines for breaking those rules can be pretty hefty.
You're right. The penalties for non-compliance can be quite severe.
So how are they doing in that area? Have they had any run-ins with the food safety authorities in the past?
That's something we need to investigate further. It's definitely worth taking a close look at their legal and compliance history. We don't want to invest in a company that's known for cutting corners or ignoring food safety rules.
Agreed. Okay, so we'll add that to our growing list of things to check out. What other regulations should we be paying attention to? The FSS Act is just one piece of the puzzle, right? What else is out there that could trip them up?
Another big one is the Legal Metrology Act of 2009.
The Legal Metrology Act. What in the world is that?
It's basically all about fair trade and consumer protection. It covers things like weights, measures, and packaging.
Ah, so making sure consumers aren't getting cheated when they buy things.
Exactly. Retailers need to make sure they're measuring and labeling their products properly and that the packaging meets government standards.
Makes sense. So, any hints in the documents about whether they've had any issues complying with the Legal Metrology Act?
We'll have to dig into that. We'll want to see if there have been any legal cases or fines related to this act. It's always a good idea to look at a company's past behavior to see if there's a pattern of non-compliance.
Yeah, I got it. All right, so food safety and weights and measures, those are two big ones, but I'm sure there are other regulations they have to deal with too. What else should we have on our radar?
Well, you've got environmental regulations, labor laws, tax laws, and a whole bunch of other rules and regulations that impact businesses in India. It's a pretty complex landscape.
Wow, it sounds like a regulatory jungle out there.
Yeah.
So how do we even start to figure out if they're complying with all these rules? It seems overwhelming.
We'll have to take a multi-pronged approach. We'll look at their legal history, check for any ongoing lawsuits, and look for any warning signs that could point to potential problems. It's also helpful to see how they talk about compliance in their own disclosures and public statements. Do they seem to take it seriously, or do they just brush it under the rug?
Okay, time to put on those detective hats again. But before we go down that rabbit hole, I want to circle back to their expansion plans. They're really focused on those physical stores, right?
Yeah, they are.
But is that the right move in today's world? I mean, e-commerce is booming, and the way people shop is changing so fast. Are they putting too much emphasis on those brick-and-mortar stores?
That's a really good point. A lot of retailers are struggling with that question. The line between online and offline is getting blurrier every day. What worked yesterday might not work tomorrow.
Exactly. So is Vishal Mega Mart making the right bet by investing so heavily in brick-and-mortar stores? Or are they missing the boat on this whole e-commerce revolution?
It's a tough question, and there's no easy answer. We'll need to take a close look at their strategy, consider the current trends, and figure out if their approach makes sense in today's retail world.
It's like they're trying to straddle two different worlds, the old school world of physical stores and the fast-growing world of online shopping. It'll be interesting to see if they can find that balance. But before we get too carried away with their strategic dance moves, I want to explore one more area before we wrap up this part of our deep dive.
What's that?
Their commitment to corporate social responsibility. All that stuff about sustainability, ethical sourcing, community engagement, doing good while doing business. I'm curious to see how they approach this. It's a pretty important aspect these days.
You're absolutely right. CSR is becoming more and more important for companies, especially those that deal directly with consumers.
Exactly. People are paying more attention to what companies are doing, and they want to support businesses that are doing the right thing.
And it's not just about consumers either. It can also attract investors and help build a good reputation. CSR is becoming a key part of a company's overall value proposition.
So where does Vishal Mega Mart stand on all this? Are they just paying lip service to CSR, or are they actually committed to making a difference? Are they putting their money where their mouth is?
That's a great question. It's hard to say for sure based on the information we have. Their CSR reporting is a bit vague, and it's tough to measure the real impact of their initiatives. Are they really changing things for the better, or is it all just for show? We need more information to make that call.
Okay, so it's a bit of a mixed bag on the CSR front. They seem to be doing some things, but they're not exactly shouting it from the rooftops. And we don't really know how effective their efforts are.
Yeah, that's a good way to put it. Transparency and clear results are really important for any company that wants to be seen as a genuinely responsible corporate citizen.
Well said. Okay, I think we've covered a lot of ground in this part of our deep dive. We've gone deeper into their financials, looked at their competitive landscape, and uncovered some interesting connections and potential conflicts of interest.
And we've also identified some key areas for further research, like their regulatory track record, their expansion strategy, and their CSR initiative.
You got it. There's still a lot more to uncover, but I'm definitely feeling much more informed about this IPO. Can't wait to see what we dig up in the next part of our deep dive. Okay, we're back, ready to wrap up our deep dive into this Vishal Mega Mart IPO.
You bet. We still got some digging to do. Remember that ownership structure we were talking about? How much control do those promoters actually have after the IPO?
Yeah, I'm curious about that. Samayat Services, they were selling a lot of their shares.
Right. So after the IPO, their stake drops to Air%.
Still a pretty big chunk, but a definite decrease.
Oh yeah, they still have some serious influence. But it's not the total dominance they had before.
Okay, what about Kadara Capital Fund 2 LLP? What happens to their stake?
Theirs actually stays the same at Ds%.
Wait a minute. They don't sell any shares, but their ownership percentage goes up. How does that work?
Think of it this way. When you take a big chunk out of a pie, the other slices suddenly look a little bigger, even though they haven't changed size.
Oh, I get it. Dilution. But hold on. We were talking about Kadar being part of a whole network of other companies. Did we ever figure out what those connections are and whether there could be any conflicts of interest?
We did some digging, and yeah, it turns out Kadara Capital Fund 2 LLP is part of a pretty complicated web of investment funds and management companies. And get this, some of these entities have investors in common, and their investment goals might overlap too.
Okay, so what's the potential problem there? How could that affect Vishal Mega Mart?
Well, it raises some red flags about possible conflicts of interest and whether those connected companies might put their own interests ahead of Vishal Mega Mart and its other shareholders.
Yeah, you don't want to see decisions being made that benefit some investors at the expense of others. Not exactly a fair game. So it seems like transparency and independent decision-making are going to be really important if Vishal Mega Mart wants to build trust with investors.
Absolutely. Checks and balances are key. All right, let's move on to their regulatory track record. We know they have to follow a ton of rules and regulations in India, but have they actually had any problems in the past? Any skeletons in the closet?
Spill the tea. What kind of trouble have they been in?
Okay, so back in 2023, one of their stores got fined for violating the Food Safety and Standards Act.
What happened?
They were selling food products that were mislabeled and adulterated.
Not good. Food safety is a big deal. Consumers need to trust that the food they're buying is safe. So what did they do about it?
Well, they paid the fine and took steps to improve their compliance procedures. But it's definitely a reminder that even big, established companies can mess up, and regulatory risks are always out there.
Okay, one strike, hopefully not two. Any other regulatory issues we should be aware of?
There have been a few other incidents, but nothing too major. some labor law violations, some environmental fines, and a few problems with weights and measures. Not huge problems on their own, but it does make you wonder if their legal and compliance systems are as strong as they could be.
Yeah, it seems like there's room for improvement there.
Hmm.
Okay, let's switch gears to their CSR efforts. How are they doing in terms of sustainability, ethical sourcing, community engagement, all that good stuff? Are they walking the walk, or is it all just for show?
Well, they do have a CSR policy, which is a good start, and they've set aside some money for different initiatives. They've supported education programs, donated to disaster relief efforts, and they're working on reducing their environmental impact. All good things, right?
Definitely. But are they really committed to making a difference, or is this just a PR move? It's hard to tell sometimes.
That's the tough part. It's hard to say for sure based on what we know. Their CSR reports are a bit vague, and it's hard to see how much of an impact their programs are actually having.
So it's kind of a mixed bag. It looks like they're trying, but we need more information to see if they're really serious about it.
Exactly. Transparency and results are really important if a company wants to be seen as a truly responsible corporate citizen.
Well, we've reached the end of our deep dive into the Vishal Mega Mart IPO. We've looked at their business model, their finances, their leadership, their regulatory history, and even their social responsibility efforts.
We've covered a lot of ground. We've found some positive things, some concerning things, and some areas that definitely need more investigation.
Exactly. And now it's up to you to decide. Is this an IPO you want to invest in? Hopefully this deep dive has given you the information you need to make a smart decision.
Remember, every investment has its risks and rewards. Do your research, think about your goals, and make a choice that's right for you and your financial situation.
And one last thing. The world of Indian retail is always changing. Vishal Mega Mart is just one player in a big dynamic market. Stay informed about what's happening in the industry, keep an eye on consumer trends, and make sure you understand the regulatory landscape. The more you know, the better equipped you'll be to make good investment decisions.
Well said. Best of luck out there.